Morning, it's Harvey Jackson. Just going to go through the Fed rate cut and how that has effect on all commodities. So you can see here the U.S. Uh, CPI numbers and how they uh, how 2000 or 1970s how the market actually recovered after that, and that's the black line, and the blue line is actually so far what we've seen. And what I'm going to show is how corn is, something similar, right? And I'm not saying I know what the future holds either, but just how that big run up and how things are kind of correlating. You can see how that actually correlated to the 1970s as well. So you started lower, came up, and then kind of flattened out. Canola, we've had the same rise and fall on a monthly chart. Spring wheat, same thing. Soybeans, same thing as well. And the tough thing with using some of these other commodities other than corn, they don't even go back and give you a good number. But I thought I would show that anyway. Weather, just as things are kind of developing for the next 7 days, you can see that there's some rain that's going to hit a lot of the growing regions, and that's kind of delaying a lot of the harvest as we go along here. And you could see that that's actually going to maybe have an impact in some of the corn, soybean growing areas that are going to get some significant rainfall in the next 7 days as well. Although you can see that there is some rainfall that's going to hit some of the southern Brazil areas and even into the northern part of Argentina a little wee bit. But for the next 7 days, we're absent here, and that's going to delay planting in the Brazilian area until there's moisture. They will plant, but it's just at a pretty slow pace. And here you can see Argentina. They're getting some rain right now, but if you recall from yesterday, the La Nina going forward usually creates an absence of moisture in Argentina, and okay for Brazil in most cases. What I'm showing here is just where the wheat production is for Ukraine, and you can see that it's more southern part of the area of the country. And here's Russia, and I'm showing this ahead of the weather maps, and it's pretty dry and similar to what's going on in Europe or in South America. Planting is maybe slightly delayed because of some dryness, especially for those winter cereals going in. You can see on this map the 10-day of the European map. It's showing that it's pretty dry in this area and dry in that area as well. Not so much for the prairie provinces here. Oil seeds, in just a snapshot of what the market's doing. When I took this picture, you got canola down $6, rapeseed down 4.5. Soybean oil just trading basically flat at half a nut, or just a 5 ticks. Palm oil is up, second day in a row. Crude oil is continuing its climb. Soybeans down 5 cents, and your wheats are down as well, and the Canadian dollar slightly up. So if we dig in deeper, what I'm going to probably talk about a lot on today is the 20-day moving average, which is my orange. And we've had this good uptrend, and we kind of stalled out today. We'll see how this market actually trades today on the canola. But right now we are currently down and need to kind of hold this trend line. If I were to put a trend line drawn in here, it'd probably have to be here somewhere. And the breakout below that is pretty important to note if we're going to go back down. Rapeseed, we've got this wave motion, and we're trading right at the 20-day moving average, right in the middle of the range there at the moment as well. So if we look at rapeseed versus canola, what I've been talking about, we're at 120. We've went up as high as 145, and if we look back back a lot farther, just where is that range above the $100 kind of range, and we don't stay up there very long, and it should actually help or support the Canadian canola, especially with possibly shrinking crop here. So soybean oil, retracement values in just in the small move and then the big move going down, right at the 20-day moving average as well. Got a few days of support here. We don't want it to break apart here. And the palm oil, 2 good days up here. There's reports that there is production problems in Malaysia. I can quote that story if needed. Soybeans themselves, there is a trend line here, but it's a slow grind, and it is trading above the 20-day moving average and the support line. And you can say the same thing about the West Texas. Well, and I'm not going to say that's good for the Western or the Canadian farmers at all. But here we are at the 20-day moving average even on the crude oil. Canadian dollar staying below the 20-day moving average, but a little bit wider range trade today, and I think that's because of the U.S. Fed rate cut, and we're currently trading at just shy of the 74 cents. Here's wheat. Wheat does not have the good story because I would have had a trend line there, and we keep on breaking here, and we are trying to trade at that 20-day moving average as well, and that's worrisome. And this is, if we look at the slow stochastics, that would actually be a sell signal. So longer term, I do think that the market's got a shrinking kind of a supply side. Now we just need the demand to show up in Canada to keep this elevated. Milling wheat broke that support a while ago. Now we've had lots of down days in milling wheat in Europe. And here's your Chicago wheat as well. Broke that trend 3 days down below the 20-day, or just above the 20-day moving average on the hard red winter, and trading at those other points on the other ones as well. Corn still trying to trade at 23.6 above the 20-day moving average, so that's a good thing. And that's all I have for you today.